So good earnings overall, and of course you can see that reflected in the shares. There was a hit to gold production, though, when you take a look at the quarter past. But reading through your earnings release, it seems like some of those production issues that you have been resolved.
Morning, Katie. Yes, we ended up last year just missing our guidance because we had a conveyor belt fail in our Dominican Republic mine, and so we spent the first quarter rebuilding that. It's now built, and we've just recently commissioned it. So, and we've guided this year the ramp up on the back of that, taking that backlog away. So, a good place to be. Lots of projects on the go, and as you've seen, the gold price is high, and so looking forward to larger margins throughout the year as we drop the costs and expand our production.
Yeah, you're right. You take a look at gold right now, currently trading near $2,300 an ounce. As I understand it, Barrick, I mean, you have several $1 billion of cash at hand. Are you looking to make any acquisitions given how hot the gold market is?
I think, Katie, we have an organic portfolio that will deliver about 30% growth in our production profile through to the back of this decade. And so we want to spend some of that on capital to deliver on those plans. And then, of course, with a bigger margin, we've got a very clear return policy as far as share buybacks and growing our dividends. So that will be part of that, and as part of our capital allocation strategy.
And I mean, spending a little bit more time on the price of gold, I mean, it's up about 11% or so far in 2024. How are you thinking about it? Do you see gold as maybe overbought here, or do you think that this rally has more room to run?
I think it's showing, it's measuring the complexity of the global economy, as well as the geopolitical situation that we're facing across the globe. And it's interesting, Katie, that you see the gold price go up. The equity is lagging. The equity values are lagging. We've seen the ETFs lighten up. So really, my interpretation is that people are very nervous about paper currencies at the moment. And of course, it's a year where most of the major economies are holding elections, and people are propping up their economy. So I think that's what you'll be seeing. And on top of that, the geopolitical situation is extremely dynamic. So, and gold is, a measure of uncertainty and economic risk. So that's what I think we're seeing.
Well, I'm so glad that you brought up the disconnect between what we're seeing in the shares versus what we're seeing in the actual metal itself, because I take a look at your share price so far this year, and I think you have one of the best tickers out there, GOLD, for Barrick. Really gets the point across. But your shares are down 7% this year. Gold is up more than 11%. You have a similar situation with your competitors as well. Why haven't the gold miners really kept up and participated in the rally that we're seeing in gold itself?
So I don't really know, but I can hazard a guess. So what I think is happening is that we all experienced significant inflation impacts in our costs, which shrunk the margins. And so the investors relied more on buying the physical. But as we've got on top of our businesses, and I'm speaking specifically for Barrick, and we're now at a point where we're growing production again, and of course that drives the costs down irrespective of the inflation. So we start growing the margins, and therefore the return, and once you get returns visible in the equity, of course, as you know, gold doesn't pay interest. So then you should see rotation out of the equity, out of the physical back into, at least part of it back into the equity. And so with this big expansion in margins, I'm absolutely convinced that you'll see a bigger interest in the equity going forward throughout this year.
And that, of course, would cause the gap to shrink there. And it's something that we see with energy companies all the time, too, with oil. Appreciate the color around that. Let's talk about copper a little bit. You talked about your organic portfolio as it relates to gold, but it's interesting. Some of your competitors, Rio, for example, have said that it's better to build a copper mine rather than to buy one. And I'm curious where you stand on that question.
So absolutely, many of my peers in the gold industry are wannabe gold miners. Back in 2019, I was very clear that we are going to build a copper portfolio within Barrick to complement its tier one gold assets. And we've done that. And just to put it in perspective, you saw BHP make a bid for Anglo American this last week. And just to put it in perspective, our portfolio that we are now delivering against, by the time we finish the Reko Diq expansion, will be almost the same size as the Anglo American copper portfolio, which BHP is bidding for. And that's a very valuable portfolio, as you've seen in the size of the bid. So we're excited about our copper part of our business, and we're definitely on that delivery path to be able to become a significant copper producer as we are gold.
And Mark, I only have about 30 seconds left with you, but you brought up the takeover, and I'm wondering, are there any Anglo assets that you might be interested in if that BHP takeover proceeds?
BHP is the ultimate 5,000-pound gorilla in the mining industry. It's a determined company. Right now, we're very focused on our organic growth.